Hello everyone, welcome back to another video. Hope you guys are doing well. In today's video, we are going to talk about important journal entries. So make sure you watch this video till the very end so you don't miss any of these. Without any further ado, let's get started. So our first journal entry is corporate wala returns $3,000 worth of defective merchandise to supplier and receives a credit. We need to record this journal entry. So whenever you will return any merchandise which you had bought on credit, what will happen? Earlier, you would have created a current liability for that. So you need to reverse that current liability. And what you would have got? You would have got the inventory which you are now returning. So you will debit the accounts payable and you will credit the inventory account in order to record this transaction in the books of account. Moving ahead, now let's talk about our second journal entry, which is corporate wala recognize a warranty liability of $6,000 for products sold in past, and we need to record this adjustment entry. So what will happen? You need to record a warranty expense and against that you need to create a liability. So what will be our entry in that case? So we will debit the warranty expense account in order to record the expense and we will create a warranty liability, which we can also call it as warranty payable. Moving ahead, now let's talk about our next journal entry, which is corporate wala receives a loan from bank with a principal amount of $50,000 and we need to record this transaction in our books of account. So whenever you will receive any loan from your bank, what will happen? You will receive the cash from bank and against that cash, you need to record a liability of bank loan or loan account. So what will happen? We will debit the bank account here and you will create a liability of bank loan or loans payable, whatever you have mentioned. All of these are correct. In this question, we don't need to pass on the journal entry of interest expense, but let's suppose if we are paying the interest on this loan, what will be our journal entry in that case? We will debit the interest expense because it is an expense for business and we will credit the bank or cash because we are paying our expenses. And how we would have calculated the interest amount? We would have multiplied the principal amount with the rate of interest that will give us the annual interest. And let's suppose if you are booking for only a month, you will divide this amount by 12 and you will get monthly interest expense amount. Moving ahead, now let's talk about our next question, which is corporate wala recognize a $12,000 accrued salaries at the end of the month and we need to book this adjustment entry. So whenever there will be an expense which is recognized but we haven't paid it, it will generate a current liability for us. So what will be our journal entry in that case? We will debit the salary expense account and we will credit the accounts payable, outstanding salary or accrued salary, whatever current liability you want to use, all those are correct. Moving ahead, now let's talk about our next journal entry, which is corporate wala issue a promissory note of $25,000 to a supplier in exchange for goods. We need to record this journal entry for issuance of the promissory note. So what is happening here? We are receiving the goods, but instead of paying them, what we are doing? We are giving them a promissory note or bills of exchange. So to record this transaction, what we will do? So we will debit the purchase account because we are receiving the goods and we will credit the bills payable or promissory notes or notes payable, whatever you want to use. All those are correct. Moving ahead, now let's talk about our next journal entry, which is corporate wala purchase equipment for $40,000 on credit and we need to record this journal entry. So whenever you will buy any equipment, it will increase your asset, but because you are buying it on a credit, it will not impact your cash, but it will create a current liability for you. So your entry would be equipment account debit to accounts payable account by 40,000 amount. I hope till here everything is clear to you. Moving ahead, now let's talk about our next journal entry, which is corporate wala settle a lawsuit by paying $15,000 for damages and we need to record this transaction in our books of account. So whenever you are paying any lawsuit damages, it will be treated as your expense and if you are paying it, you will credit your bank, but if you are not paying it yet, it will generate a liability or it will create a liability for you. So what will be our journal entry here? Lawsuit damages account debit to bank or cash account by $15,000. So we are assuming that they are settling the payment here. If they have only recognized the liability. We would have created a liability instead of paying it off by cash or bank. Corporate wala signs a contract for a year-long insurance policy and pays $36,000 in advance. And we need to tell the journal entry for this transaction. So whenever you are going to pay for any expense in advance, it will create a current asset for you. So what will be our journal entry here? We are going to create a current asset of prepaid insurance with $36,000, and because we have paid in cash, so our cash balance will reduce. Therefore, we will credit our cash account. So our entry would be prepaid insurance account debit to cash with $36,000. But this is not it. At the end of first month, you need to record the expense as well. So what will be your journal entry for recording the insurance expense? You will debit the insurance expense account and you will credit the prepaid insurance account. This time you are not going to credit the cash because you have already paid the cash in advance. And how we have calculated this 3000 amount? Because total amount was 36,000. So we have divided it by 12. So we have got the monthly insurance expense. Okay, great. I hope this is clear to you. Let's move on to our second journal entry, which was Corporate Wala provides consulting service in May, but only receives the payment in July, and we need to record the service revenue, and the service revenue is 8,000. We need to record the journal entry in May as well as in July. So what will be our journal entry in the month of May? We have provided the services, but we haven't got the cash yet. So what will be our journal entry? We need to create a current asset against the service revenue. So what will be our final entry here? We will record debit accounts receivable account with 8,000 and credit our service revenue by 8,000. So this is our May month journal entry, but because we need to record the journal entry in the month of July as well, when we have actually got the payment. So in July, what we are going to do? We are going to record cash account debit because this time we are going to receive the cash, and we will credit the accounts receivable account because we earlier would have created a current asset. Instead of accounts receivable, if you had used any other similar account, that is fine as well. This first entry, we can also call it accrual journal entry. Why? Because in this entry, we are recording the transaction in the same month in which the transaction took place, whether we have received the cash or not. Okay, great. Now let's move on and check out our next entry, which was Corporate wala purchase office supplies worth rupees 10,000 on credit. We need to record this transaction. So what we are going to do, because this is a credit purchase, we have to create a current liability for this. So our debit would be office supplies account debit to accounts payable account. Instead of accounts payable, if you have used any outstanding liability or any other current liability, that is fine as well. So this was the journal entry which was required in this question. But let's suppose after this credit purchase, there will be a time when we will make the payment. So what will be the journal entry of the payment? That I have not asked in this question. But let's suppose if I'm asking, you have to record the payment as well. So what will be our journal entry? We will debit the accounts payable account and we will credit the cash account. Why? Because we are paying our current liability. Moving ahead, now let's talk about our next journal entry, which is Corporate wala borrows $50,000 from a bank in Feb and pays the interest in June. We need to record the journal entry for both month Feb and June. So what will be our journal entry in the month of Feb? We will receive cash from bank against the loan. So our debit would be cash account debit by 50,000 and we will credit a loan account by 50,000 as well. And in the month of June, what will be a journal entry when we are going to pay the interest expense account debit to cash account. Here I have not mentioned any amount. Why? Because in the question we have not got the rate of interest on the loan. That's why we have not calculated the amount of interest here. If we would have got any percentage of rate of interest, we have to calculate the interest amount as well. Okay, great. Now let's move on and talk about our next journal entry, which is Corporate wala acquires a new piece of machinery for $1,20,000 with a useful life of 5 years and no salvage value. We need to record the journal entry for the acquisition. Okay. So what will be our journal entry for the acquisition? We will receive the asset, which is a debit. So we will debit the machinery account and because we have to pay, we will credit the cash or bank account by $1,20,000. So this is the acquisition journal entry. But let's suppose if you have to book the depreciation journal entry as well, what would be a journal entry in that case? So we will debit depreciation expense account debit to accumulated depreciation account by $2,000. So how we have calculated this depreciation amount? We have total value of $1,20,000, which we have divided by 60. Why 60? Because in a year we have 12 months and we have total useful life of 5 years. If in case we would have got any salvage value, we would have reduced that amount from $1,20,000 while calculating our depreciation amount. Moving ahead, now let's talk about our next journal entry, which is I believe the most trickiest journal entry amongst the 7 journal entry I have asked in the last week. So our journal entry is corporate wallet discovers an error in the financial statement and need to adjust the book of account which is overstated by $15,000 in revenue. So we have overstated the revenue by $15,000 which we need to correct. So what is the meaning of overstatement? We have shown more than it should be. So what will be a journal entry? Earlier we would have recorded a credit in the revenue account. So we will debit it by $15,000. And what will be our credit here? So because question is not clear, we will either credit cash account or accounts receivable account. Why cash account and accounts receivable account? Because we are not sure that this amount relates to a cash sales or a credit sale. That's why either of these accounts you can use. Moving ahead, now let's talk about our next journal entry, which is corporate wallet receives a prepayment of $7,000 from a customer for services to be provided evenly over the next 6 months. Record the journal entry for the initial receipt and monthly adjustment for the first 2 months. Okay. So what will be our journal entry here? We are receiving revenue in advance. So it will create a current liability for us because we have received prepayment from customer. So we will debit the cash account here because we have received the cash, and we will create a current liability of unearned revenue. And this is not the final journal entry. We need to record the monthly adjustment for the first 2 months as well. So at the end of first month, what will be our journal entry? We will record debit unearned revenue account to service revenue account by 1166.67. So how we have calculated this amount? We have total $7,000 prepayment, which is for 6 months. So for getting 1 month, we have divided it by 6. So we have got 1166.67. In the second month also, we need to record the same journal entry because services was provided evenly over the 6 month. So again the entry would be same for the second month as well, and so on till we complete our all the 6 month. Corporate wala issues a 50,000 bond with a 5% interest rate for 5 years, and we need to record the journal entry for bond issuance. So when you will issue any bonds, what will happen? You will receive cash and you will create a long term liability. So what will be our journal entry in this case? We will receive bank or cash which will be debited by 50,000, and then we will credit the bonds account which is a long term liability with 50,000. So in our question, we only need to book the journal entry for issuance of bond. But let's suppose at the year end, we are making the payment of this interest. What will be our journal entry in that case? So we will book the entry interest expense account debit to bank or cash by 2,500. And how we have calculated this amount? We have 50,000 amount which is 5% rate of interest. So annual interest will be our $2,500. Okay, moving ahead. Now let's talk about our second journal entry, which is going to be corporate wala enters into a lease agreement for office space and pays the first month rent in advance of rupees 8,000, and we need to book this journal entry. So in this case, what will be our journal entry? We will debit the advance rent or prepaid rent, and we will credit the bank or cash account by 8,000. So it is a very simple entry of prepaid rent or advance rent, but in interview they are not going to ask you questions straightforward. They are going to give you situations and you need to understand it and book the journal entry accordingly, because in real life also you will be receiving the transaction details and not the explanation with that. So you need to understand by using your own brain and book the journal entry. Now let's talk about our next journal entry, which is corporate wala recognize a bad debt expense of 5,000 rupees due to an identified customer's inability to pay, and we need to record the journal entry. So what will be our journal entry in that case? We will book bad debts expense account debit to allowances for doubtful debts. And then when we will write off this expense, what will be our journal entry? We will book allowances for doubtful debt account debit to accounts receivable account. Now, some of you might be thinking, can't we just book bad debts expense account debit to accounts receivable? So yes, you can book because the ultimate effect of this will be the same. But in practical life, we follow this approach where we are also creating a allowances for doubtful debt account. Okay, moving ahead. Now let's talk about our next journal entry, which is corporate wala declares and pays cash dividend of $10,000 to its shareholders. We need to book the journal entry for both declaration and payment. So what will be our journal entry? We will debit the retained earning account and we will credit the dividends payable account by $10,000. Why retained earning? Because it is the profit that company has retained till now, but now they have decided to distribute it among their shareholders. So this is the journal entry we are going to book when we are declaring the dividend. But what will be a journal entry when we are going to pay the dividend? So we are going to debit the dividends payable account, which was the current liability we had created in our previous journal entry, and we are going to credit the cash or bank account because we are paying the cash to our shareholders. Moving ahead, now let's talk about our next journal entry, which is going to be corporate wala receives a utility bill of $2,500 for services provided during the current month but does not pay it until the next month. And we need to book the journal entry for both the month. So what will be our journal entry in the current month? We will book utilities expense account debit by 2,500 to accounts payable. And what will be our journal entry next month? We will debit the accounts payable account, which is our current liability, to cash or bank account. So in current month, we have created an accrual of 2,500 and in next month, we are going to pay it off. Instead of accounts payable, if we have used any other outstanding expense or any similar current liability, that is fine as well. Moving ahead, now let's talk about our next journal entry, which is corporate wala issues common stock with a par value of $1 per share for $20,000. We need to record the journal entry of issuance of stock. So what will happen when we will issue the stocks? We will receive the cash and we will create a liability of stock. So what will be our journal entry? Debit cash account or bank account by $20,000 and we will credit the common stock account by $20,000. Moving ahead, now let's talk about our next journal entry, which is corporate wala acquires a patent for $30,000 and we need to record the journal entry for this patent acquisition. So what will happen when you will acquire a patent? You will receive a asset and you will pay the cash. So you will debit the patent account and you will credit the cash or bank account by 30,000. So I hope these journal entries are clear to you guys.